As the world braces for worsening effects of climate change, developing nations are being battered twice. 34 of the 59 developing economies that are most vulnerable to climate change are also at high risk of fiscal crises.
Countries are either in default or they're facing yields to maturity exceeding 10%, which means that they don't have access to capital markets.
Enter the Debt for Nature swap.
Basically, what debt for nature swaps do is they involve debt restructuring, and in return for this, countries agree to invest in different nature and conservation initiatives.
We're trying to make the financial part as plain vanilla as possible.
Of the recently completed Debt for Nature swaps, the Belize Blue Bond is the largest at $360 million US. Prior to the deal, their debt level approached 130% of GDP.
We had the opportunity to refinance the entirety of their external commercial indebtedness. And so as a result, the government realized $180 million of savings. Now, as a result of this transaction, Belize will be on a journey towards protecting 30% of their ocean.
But not everyone is happy with these deals. Greenpeace and 22 other NGOs have called for a rejection of debt for nature swaps. And analysts who study sovereign debt are not so sanguine on the blue bonds.
It's successful in that it essentially opens up a line of credit for nature. It represents nature in these discussions. However, we're talking really high transaction costs, much higher than we originally thought. Everyone is winning, but not nearly as much as you might think, because it's so expensive.
These concerns have not deterred market players, though, with deals in the works for Gabon, Ecuador, and Sri Lanka. And investors are snapping up the bonds as a way to show their ESG commitments, meaning blue and green bonds will continue to be a tool to combat climate change.
Until the world decides to undertake massive debt forgiveness on a planetary scale, we deal with the here and now, and we don't want to let the great be the enemy of the good.